If you're thinking about buying a condo in Vancouver right now, the hardest part isn't finding listings. It's figuring out whether you're stepping into an opportunity. Because what you're seeing online feels confusing. Inventory is clearly higher and prices are softer, but nothing feels like it's collapsing. And that's because something important has changed. Different neighborhoods are behaving very differently, but the same rule is showing up everywhere. Buyers have stopped acting emotionally. In this video, I'm going to walk you through what's actually happening in the Vancouver market in early 2026, why prices are adjusting without falling apart, and how buyers are quietly negotiating deals today that simply weren't available years ago. Let's start with the shift that explains almost everything. Right now, active listings across Greater Vancouver are sitting in the mid-teens. That's materially higher than what we saw during those hot years. In those peak periods, inventory was often closer to half that. Supply is meaningfully higher, but demand didn't disappear. Sales volumes are lower because buyers are cautious, not because they've left the market, and the reason is simple. The math has changed. Back in 2021, many buyers locked into mortgages around 1.5% to 2%. Today, a lot of those 5-year terms are renewing closer to mid-4 to 5% range. For a typical condo mortgage, that can mean well over thousands of dollars per month. For end users, that tightens affordability. For investors, it often flips the deal from neutral to negative. That's why inventory isn't rising because people want to sell. It's because people have to sell. And here's the part charts don't show. Buyers aren't frozen. They're deliberate. In 2021, the question was, how fast do I need to move? In 2026, the question is, what happens if I'm wrong? That shift alone slows markets down more than interest rates could ever. When buyers start stress testing decisions instead of chasing them, volume drops, even if people still want to own. There's another pressure point buyers don't always see. Household reliance on equity has increased. With HELOC balances sitting near multi-year highs, that tells us people are leaning on house wealth to manage the day-to-day costs. When the pressure builds, condos, especially secondary properties, are often the first asset to go. On top of that, recent tax changes have reduced short-term speculation. That doesn't mean demand vanished. It means liquidity changed. Fewer speculative buyers means sellers now have to compete, not just list. And if you're a buyer, the key takeaway so far is simple. You don't need prices to collapse. You need leverage. And leverage has quietly returned. And just to be clear, leverage doesn't mean chaos. This isn't a market where everything is on sale. It's a market where pricing has to make sense. Well-priced, well-located condos are still moving. Overpriced or investor-heavy inventory is what's sitting. That distinction matters because it tells you this market isn't broken, it's selective. And selective markets tend to reward buyers who are prepared, not buyers who rush in. This is where buyers are making very rational decisions. Pre-sale activity across Metro Vancouver has slowed significantly, not because buyers don't want to build, but because the cost of delivery often no longer lines up with resale pricing. In many cases, new projects need to price meaningfully above resale just to make the math work. At the same time, resale condos, particularly in established concrete buildings, are trading at noticeably lower price points. So buyers are doing the obvious comparison. Why wait several years, take construction risk, or tie up a deposit when you can simply buy a similar layout today for less? And it's not just price. When you buy a presale, you're taking delivery risk, timeline risk, financing risk, and market risk all at once. When you buy resale, you know the building, the strata, the layout, the view, the monthly costs. In uncertain markets, buyers consistently prefer known outcomes over theoretical upside. That preference shift alone explains a lot of what we're seeing right now. That doesn't mean prices surge next month. It means the market is rebalancing, not unraveling. For a long time, the investor playbook was straightforward. Rents covered most of the mortgage, appreciation handled the rest. In 2026, that math is tighter. In some downtown pockets, we've seen modest rental softening. Not dramatic, but enough to affect cash flow. At the same time, ownership costs have risen. That's how many investors are now facing ongoing negative carry. This is why days on market are longer. This is why assignment listings exist. Not panic, pressure. And pressure is what creates negotiation room for buyers. One of the biggest mistakes I see buyers make in markets like this is waiting for certainty. Markets don't give certainty. The opportunity isn't about timing the exact bottom. It's about buying something that still works even if the market does nothing for a while. That's the mindset shift. And buyers who get that right are the ones who will do well. So how do you actually buy well in a market like this? Simple. 3 principles. First, let time work for you. Listings that have been sitting for several weeks or longer often indicate flexibility, both on price and terms. Second, buy for end users, not speculation. Livable layouts, larger floor plans, well-run concrete buildings. Those attract long-term owners and tend to hold their value better through market cycles. Third, use subjects properly. Financing, inspections, document review. In hot markets, buyers waive protection. In balanced markets, protection becomes leverage. If a building has upcoming work or uncertainty, that's a pricing conversation, not automatically a deal breaker. The Vancouver condo market isn't crashing, but it's no longer emotional. It's selective. It's price sensitive, and it rewards buyers who understand the math. If you're patient, prepared, realistic, this is one of the few periods where buyers can move deliberately instead of reactively. And if you're trying to figure out which types of buildings actually make sense for your situation and which ones don't, feel free to reach out. I'm happy to talk through it with you. Thank you for watching, and I'll see you in the next one.